What's up, guys? It's July 17th, 2025. Looks like we had a bull trend in the market. Pretty cool day. Took a couple trades, made like 120-ish bucks. So it was nice. I was at work for most of the trend, but I caught this leg 2 in the morning. I got filled on here on NASDAQ, exited, and then I couldn't really get filled. I did take a short, and I had at the end of the day on NASDAQ, the selling was a little bit stronger, so I felt confident with it right here at these 3 bars. And then I ended up just hitting out for break even, I think like plus a point on like bar 75. So not too bad, not the best day, but something I find that's interesting is when I took Systems Academy last year, there was a chart of a trend trader and a chart of a scalper. And the trend trader had spikes in his P&L, but then he would go through like this and then it'd be spikes. And when I first started trading, I was like, I gotta catch every move. But now understanding probabilities and the rotation of the markets, scalpers make more money because in trading ranges there's lots of pullbacks. So I did a little bit. Even though I started out with more losses, I had more trades yesterday because the pullbacks were deeper. So I think that's pretty interesting. I was comparing my trading mentality from last year to this year, how I would kill for a day like this I wouldn't even be able to get an entry like bar 11 last year. I would probably be buying here, and just hold. So pretty interesting stuff. I do prefer pullbacks and entering on limit orders now because it gives me time to think about the setup. I'm in a trade right now. It's a good example. So here's the breakout. I wonder why it starts at 207. Whatever. So here's the breakout. I get filled on bar 208. It's a shallow pullback. I was worried about this pullback because it started with 5, 10, 15, 20, 25 minutes of selling. But look at the closes. They're shallow. So I got filled here at the 50% mark. Originally I did have it like this. I would have got filled here, but then I decided to move it to below the first strong breakout bar. I'm in profits right now, and we'll see if we can tag the high. This is my main setup, so bears get short down here. Then the market starts to rally, so they're trapped. They're going to short higher and get out at break even, which was right around this area here. Bulls that bought maybe bar 203, they bought here, maybe they even bought this bar. They want to add to their position because now they see the market's going in their favor. So one type of trader is pressing their position, second type of trader is hitting out of a losing trade at break even, and the third type of trader, myself, I'm looking to buy the pullback. And that's what I did. I bought the pullback. So 3 types of traders doing one thing. They all have different agendas, but they all have to buy the market to complete their agenda. Generally, there's a reason to buy and sell every bar, but when there's an imbalance, so there's an imbalance right around here because more people are buying and selling, we can see a move in one direction. Just like now, this move up, let's just pretend my target gets hit, that sets me up for the next trade because look, 212 is a bear bar. So now we're going to go here, it's going to pull back, and I'm going to look to enter right here and go for a swing. Maybe it goes like that. Something like that. I like to see a new high, not the same high, because now that's a double top. But if it's a new high, I know there's at least bears getting trapped because there's stops there. I haven't done that study, but it's just something I started to notice where I would prefer to take at least a pullback after a new high. People start to take pullbacks after a new high, pullback. New high, pullback, new high, pullback, new high, pullback, new high, deep pullback. Not a new high, kind of a double top, but then new high starts to pull back 61. So it's pretty cool stuff. I really enjoy trading the 50% pullback. And if you guys want to learn more about that, join the membership below where I do the trade breakdowns and talk about my entries, exits, and trap traders. I trade second legs and then, second legs is the main thing I look for. Second legs is the trade setup, market cycle, gaps, and trap traders as filters, with trap traders being the biggest filter. I use gaps as a quick indicator if we are trending or trading range. However, when it comes to placing a trade, I'm really the main thing I'm looking for is those trap traders. So bears that shorted the low of bar 1 are trapped pretty quick. And look at bar 6, it doesn't actually come back to the 50% mark. So bears short down here, they short more up here, they don't get out, they short again, and then they get out at break even right around bar 11, and that causes that leg 2 move. And then I look like, oh, we have 2 gaps open. Okay, I want to stay long. I couldn't get filled. The reason I tried the short at the end of the day on NASDAQ was because the gap closed. So I decided we were in trading range and I was willing to sell high, even though there was more bullish pressure. See, look, so I saw this climb. I actually didn't get filled here. I was pretty upset how fast. Look, came really close to my target and then hit on 37 or 35. So I was like, man, that would have been a nice trade. Nonetheless, I started noticing gaps are closing, so I became more willing to sell. I actually caught a second leg of this as well. I got filled here and exited there, something like that. So I actually took 1 trade long, couldn't get filled long for the rest of the day, and took 2 shorts, 1 break even. So then I saw this leg down. I was like, oh, that's a nice bear leg, and I got out of break even right around here, I think. And what sucks is bar 78 went to my target right there. So I got filled on 59, and I think I exited break even on 75. I was still holding right around here. So leg 1, leg 2, bulls that bought up here, gonna buy more lower and get out 50%. Problem is there were so many bulls that they read this more as a pullback, and then bears all saw 55, 56, 57, and they went a second leg down just like I did. And they got it on bar 79 actually, which I wasn't able to participate in, but nonetheless, when the dynamic's present, the leg 2 has a better chance of working. All right, weekly chart, daily chart. There's a gap here, so we know bears are trapped right around the swing from here. Breaking out, limit order traders are trapped, and bulls got follow through. They try and get short. Maybe they tried to get short here. They somewhat got a break even, didn't really come down to it, but let's say they just hit out as fast as they could to avoid a bigger loss, so they got a smaller loss. Starting to buy, and now they're buying the market. Bears are buying back shorts. Bulls are buying the pullback. Second leg traders are joining the party, and we're starting to see a rally. The daily chart shows that pretty nicely as well. Leg 1, what the heck? Leg 1, pullback, leg 2, pullback, leg 3. And with that being said, this is all one big leg 1. And then this is showing to get a second leg. It does get a second leg with these 3 bars. First bear bar was a better fade. So bulls bought this because they saw it was the first trend line break as well. First low taken out. And it ended up rallying to the previous high. Ooh. Okay, look, guys. I called this out like 30 seconds ago. I said I would prefer to see a new high, then I'm going to take the trade again. See, bears are shorting new highs, bulls are taking profits. I was in that trade. You guys saw it. Let me set this up. A lot of people do breakdowns of ES and stuff, so I really want to start gearing this towards more so finding trades and developing an edge, because at the end of the day, that's what we're all trying to do, is we're trying to develop that edge to keep trading, or to be profitable, excuse me, to keep us in the markets longer. There it is again. And again, it's repeatable. I'm going to start, I don't know about this trade specifically, but I do want to do another study about taking the 3rd trade in a row. So what that means is I'm going to take this trade, I'm going to take this trade, and then I'm going to let the market cycle do whatever it wants until I can find another trade. Because then that 3rd trade in a row would be a losing trade if I'm understanding, what the heck? If I'm understanding the white paper, Ollie's white paper correctly. It says to avoid the 3rd trade in a row. Well, I need to do my own homework though. I do read the white paper quite frequently. A few of you have it. You guys know. So, excuse my dog. He's barking at the air again. I think it's in his way. So yeah, I like to read his white paper, and then I have to do my own studies because it's really important to backtest. I've been trying to preach backtesting in the Discord for quite some time, and please, guys, if you want to find your edge, it's within backtesting. Come up with an idea. So let's say I want to trade 50% pullbacks. I don't know if it's going to work. So you just for like this takes less than 30 minutes. You just very loosely do this. across like 10 days, and you just look like, okay, 1, 2, 3, 4. Okay, it worked. Out of like the 20 trades I threw up, it worked 11 times. Okay, that's called back of the napkin. Then after you do the back of the napkin study, you go deeper and you start getting 100 trades on random days. And after that, you want to do 30 trades in a bull trend, 30 trades in a bear trend, 30 trades in a trading range. Then you take those profits, you take those results, and you just start filtering them out. You see where most of your losers are coming from, you see where most of your winners are coming from, and that's the whole process. That was my process. That's how I started to find consistency, and that's the only way I know how to help everyone. So it's annoying work, but it's important work. Again, you guys can see I got filled. I called this out in the beginning of the video. I said if I get filled, I want to see a new high. Then I want to get filled at the 50% mark. So these bears down here are getting out at break even. They're buying back shorts. Bulls that bought the high of 213 are hoping for a rally. And I'm a second leg trader buying pullback. Now, if this trade starts to fail, I'm going to see more bear bars below the 50% pullback. And that tells me we're in a trading range because bears should not be making money. If bears are bears are short here, they short up here. This is the break even. If the market starts to hesitate below the 50% mark, bears are making money because this is their average price now. So what should be support is starting to turn into resistance if we start to bounce off it. A good system will teach you how to trade the markets, and that's something I've started to realize the last couple of months since I started trading at 50% pullback. It's just been a good time, so I hope you guys can find a system that works for you. It doesn't have to be the 50% pullback, but it does have to revolve around breakouts or reversals, but reversals are harder to trade. So the idea is you do a breakout study, you get really good at that breakout study for a couple months, maybe 6-7 months. You do the breakout study, you go trade the breakout for a couple months, forward test it, you get profitable in that direction. Then you go back to the study and look at all your losers, because all we can do is buy or sell. So if you're buying the market and it stops you out, that means that was a reversal trade, and then you manufacture a reversal setup based off your first test losers. So it's a long process. It's a process that's worth it because we're trying to make money in the comfort of our own homes, clicking a screen. So it's not all rainbows and unicorns. You gotta put in some work. You gotta sweat a little. Gotta bleed a little. And we've all been bleeding a lot. I know some of you have taken some nasty hits. All right, guys. I know I kind of prefer these kind of breakdowns because I know a lot of you are in the daily room or the trade room. A lot of you are in PTM, and you guys are going to get great information from there. But I want to make these breakdowns more about Al Brooks price action, systematic price action, and Randy Howell's trading psychology. So let me know in the comments or let me know in the Discord, please, if you prefer these kinds or you just want a straight bar by bar talk. I'm going to break this chart down from the perspective of trap traders, and then that's going to be that. Starting to go. I got filled here. The dynamic is present. I don't know if that doesn't mean it can't turn around and stop me out. But I do know when this setup is present, I have more chances of making money than losing money. Okay. Bar 1. It's a bull bar. There's a tail there, so I know bears are short. Follow through with bar 2, big breakout bar 3. Follow through with bar 5. So bears that shorted these 3 tails are very trapped into a losing position. They're going to keep shorting, and they're going to have to keep doubling their position to get the break-even price to be at 50%. I did a quick one of it quick example earlier. Look, they short down here. They don't get out 50% here. They see another bull bar. They start to short more. They believe this is resistance. Bulls have tried 3 times to go up. So 1, 2, 3. That's a wedge top. Bears are trapped. Boom. They make a quick point below the 50% pullback, and they're buying shorts quickly because they know this was a bad trade. This is their one chance they may get to bail out. Bar 14 does give them a second chance, but if they don't take that, they're going to be in a losing position. So bears get out, break even. They're buying the markets. Traders looking for the breakout, bought bar 1, bar 2. Second leg traders are buying the pullback, which also lines up to be the EMA. They get a chance to get out, break even on bar 14 as well. And it works for the other side now. Bulls that bought the high of 9 are trapped. They're going to buy more lower. Maybe bar They buy here. Maybe they don't really. There's a small tail here, so bulls did try and buy bar 10, but look at bar 11. They bought it. It went to the 50% mark. Bulls got their bailout, and then it sold off real quick. So bears did get a chance to get a leg one, pull back leg two, but it didn't go past the prior swing, so it was a failed leg two. That's how I define them. I think that's also how Ali defines them. I didn't come up with that idea. A passing leg two to me is, I have to, don't quote me on that. Now I'm gonna go check the breakout research paper because I don't know what his definition is exactly. My definition is it has to go one tick past the prior extreme to pass, which is why you see my target is always the prior swing. So bears do get a leg two, but it fails. Now bears that short here are trapped. They're gonna short more higher. And look, you can tell we're in a trending market because there's the gap and bears are not getting break even. So they have to buy back shorts for a loss, or they have to keep averaging in eventually. Looks like they bought back shorts for a loss because we see a surge in price on 19 and 20. Now we have another gap here and here. We have multiple gaps open in the beginning of the day. That's a marker for a trending market. That's a characteristic for a trending market. I'm trying to learn how do I say this? Decide where trap traders get out even if I miss the trade. So let's see. So I didn't catch this trade, but look at the bears that short 18. There's a good chance most of them got out here. So that's a trade I missed. And just because it looks good, I have to pull my limit order because we trade context. Our entries come second. The way the bar looks comes second. We trade context. And the context for trap traders is now gone. I'm not now, but however, there could be more trap traders 21, 22, 23 tail. I put this up here. We're starting to get climactic. I do have some filters. I like to see 2 bars in a row, but look at 24's tail. It barely comes down. As soon as it comes down to 50% mark, boom, bears buying out of shorts. That constant tension is what causes a trend. We can keep it going. Look at 23. Look at 25, 24, 25. Look at the tail on 27. So bears shorted here. They start to short more higher. And then the 50% marks hit on 28. Boom, causes a 3-bar rally. Now we are getting climactic. We have a spike, pullback, and channel. And we have 3 legs within the channel. We have more than 3 legs. Leg 1, pullback leg 2, pullback leg 3, pullback leg 4, pullback leg 5. I'd count it more from a trend line break perspective. I'm cognizant of both ways. That was an opposite bar count. Market cycle goes breakout, channel, trading range. So here's a spike. I don't see any trend line break. It's bar 22. So there's the leg 1. Then here's another spike. I don't see a trend line break to bar 28. And then there's that third leg. And that trade fails. Which is why I was saying I need to do that study to see how many trades I could take in a row. That's a good example of the third signal failing. So bears are trapped on 27. They're going to short more. Bears are trapped on 28. You're going to short higher. And now look, bears made money below the 50% mark. So they shorted here and they made money on 34. Since bears made money on 34, they're going to try and do it again. The bulls that bought the high of 32 are going to buy more lower on 34. And they're going to sell out 50%, which is this line here. Look at 35, the tail on it. That was a good leg 1, leg 2 for the bears. Boom, they hit their target 36. Now there's 3 legs down. There's that third signal rule that I need to work on. Bear leg here. Bulls that bought the high of 35 thinking this was just a pullback or trap. They're going to buy more here. Get out of break even. And there's a small leg 1, leg 2, 40. Yeah, I said that right. Leg 1, pullback, leg 2. Leg 1. So that's the small leg 1, leg 2. And the leg 3 failed. And then it's a leg 1, pullback, leg 2, pullback, leg 3. Then this pattern repeats itself. Bears are getting trapped at the EMA shorting, looking for a breakout. Bears that short here. They're going to short here. Look, they don't get out. But then the problem is the tail on 40. Wait, I did that wrong. Bears that shorted the 41 here. They short more here. They get out maybe 44. They make a quick point on 45. They still have opportunity to get out on 46. So now we know the trend is becoming weaker because bears are having more opportunity to get out, break even, and they made money on that leg down. So to me, we're in a trading range, and this last leg here is just a leg in a trading range. So the way I would classify this is breakout, channel, and now we're in a trading range. We do get a breakout of this trading range, but I still think just to keep the whole market cycle on one page, this was the start of the trading range. We just had more bull pressure today. All right. I'm going to speed this up. We're past the 20 mark, but I kind of like this breakdown. I'm going to flip over here real quick. It's working out nicely so far. Got that pullback. Bears had 2 chances to get out break even. This leg is actually stronger than this leg because I did not like a 25-minute pullback, 25, 10, 15, 20, 25-minute pullback. I don't like that. This is how I like to trade. Quick tap and go. Quick tap and go. I would prefer if 217 closed on a tie. There could be more sellers here. We could be in a trading range, but bears did not make money down here yet. So I'm holding until the target's hit. We have a big leg up. Bears shorted the low of 48, hoping for a reversal down, thinking it's something of this nature. Thinking there's resistance here. Leg one, pullback, leg two. And that is a form of a leg one, pullback, leg two. However, it ends up selling off and reversing 48. So bears are trapped. There's a bear bar on 52, but they don't get out break even, so we extend it to the next opportunity. And bears are starting to understand that the EMA is acting as support. So I really wish I got filled on this trade because I like to get filled and exited within like 1 to 2 bars. That's my favorite type of trade. Bears get out for a small loss on 57 because it doesn't come back to the 50% pullback. They buy back, and look at that leg two happening with 58 and 59. Strong enough to restart the market cycle. So this is the swing here. This is the swing here, and now it restarts the leg count. Look, leg one, pullback, leg two, pullback, leg three, sideways price action. So that's that trading range. Breakout, channel, trading range. There's the market cycle. I gotta make this one quick. All right, so bears are getting trapped around. Bears that shorted 57 because there are some weak hands that thought this was going to be a double top and they shorted it. They don't really get their break even opportunity here, so they're going to short more here. They don't get their break even opportunity there because this bar has passed. So let me do that again. So bears short 57 low. They try and short up here and it doesn't work. So now they see 64 is a new high. They try and short it again. Again, they don't get out break even. Then they see 67. Finally, they get out break even. And look what happens when it touches the break even price. Bears buy back their shorts. We can't make a new high. It's late in the day. But they are buying back shorts, and bulls are trying to buy that pullback. Second leg, and the front running bulls are trying to add to their position right here. All right, guys. I'm going to see what's going on with this trade. Starting to turn around on me. It does look like this could, if this trade works out, which I hope it does, I want to avoid the next trade and just see what happens. Because that will be a big P&L boost. If I take 2 trades in a row, win-win, avoid the third loss, wait for that reset. And yeah, this might be this might be a loser though, because this leg was somewhat climactic. Leg 1, pull back leg 2, pull back leg 3, leg 1, pull back leg 2, pull back leg 3. This was a nice leg. It would be nice if 217 or 215 closed on its high, then 216 filled me, and then it rallied. Instead, we had a lot of selling pressure. Leg 1, pull back leg 2. Bulls that are trapped up here, they buy more lower, and they can sell it. Look exactly where that sell-off is happening, around 217. So there's hidden resistance right there by the trap bulls who buy here and trying to get out break even. So I'm not a big fan of that. I don't want 218 to close on its low. Hopefully it even has just like a quarter tail. At least I'll know that they're still buying this level. But like I said earlier, bears are now making money below the 50% mark, and that's not acceptable if I'm looking for leg 1, leg 2. I held through this because of all the tails. But if this closes on slow, that's a breakout bar on a different time or on this time frame, and multiple bars on another time frame. So we'll see how it goes. Hope you guys are learning something. If you guys have any questions, please don't hesitate to ask me. If you learned something, share a show. Don't be a hoe. And I'll talk to you guys tomorrow. It's Friday. I'm going to try and sneak in a live stream because I'm not working tomorrow. And I start my new schedule next week, so I'll talk about that in tomorrow's video. Thank you for your time, everyone. And real quick, I'm sorry. There's that tail I was talking about, so I'm going to hold this a little bit longer. I don't like the triangle idea. But, you know, let's just follow the system. All right, guys. You have a good one. Thank you for your time. Bye.